Good morning and happy Friday to all. Mark Soderberg with ADM Investor Services with your morning ag update. Well, very quiet trade in the overnight session, leaning a little bit lower. Corn and beans right now are fractionally lower. Wheat prices off 2 to 3 cents. In the soy products mix, we're up $1 to $2 in the meal as that recovers from this week's sell-off, while bean oil prices are down 10 to 15 points. Fresh news is limited. The market seems like it is still trying to digest the two-day Argentine tax holiday from earlier this week. It appears the volume of soybeans sold during this 48-hour window appears to be right around 40 cargoes, or roughly 2.6 million metric tons. Most of these soybeans were sold to China, with most of these set to be shipped in the November-December timeframe. However, some of these are for April shipment following the arrival of their new crop harvest. News that the U.S. Treasury is working on a $20 billion aid package for Argentina to help them stabilize their struggling economy has not set well with the American farmer, prompting the American Soybean Association and others to urge the Trump administration to prioritize getting a trade deal done with China, one that does involve the purchase of U.S. ag products. President Trump stated his administration would use tariff revenues to fund an aid package for the U.S. farmers, which right now seems like a little bit of a risky proposition, given the fact that the U.S. Supreme Court will hear arguments sometime this fall on the legality of the Trump administration's use of tariffs. Also yesterday, USA Ag Secretary Rollins stated that the U.S. Justice Department, a antitrust division, will examine the high seed and fertilizer costs. With no trade deal with China, soybean sales remained deflated, with no sales on the books to China. Export commitments for the 25-26 marketing year are down 37% from a year ago versus the USDA forecast of down only 10%. China was not the only active buyer of Argentine ag goods this week, as India reportedly bought about 300,000 metric tons of soybean oil during the two-day period. Weather-wise, with no rains, with rains this week across the central, Midwest, and eastern Corn Belt, they were certainly welcome. So far, they have not put a dent into the drought conditions in this region. Corn, soybeans, and winter wheat acres in drought all rose another 1% in the week ended this past Tuesday, the 23rd. Looking forward, U.S. forecasts show nearly complete dryness across the nation's midsection over the next 7 days, with temperatures above to well above normal, favorable for harvest of both corn and soybeans, while also supportive of winter wheat plantings. Inside trade for December corn overnight, as it hovers very close to its 100-day moving average at 425. Unlike soybeans, corn demand remains strong. Export sales, they're up 75% year over year versus the USDA forecast of up 5%. Traders expect September 1st stocks, the ending stocks for the 24-25 marketing year, will increase about 10 to 15 million bushels in this September from the September WASDE forecast of 1.325 billion bushels. This in the quarterly stocks report next Tuesday. Argentine corn plantings, they've doubled in the past week from 6 to 12%. In my opinion, at these current price levels, corn prices are expecting at least a 2 to 3 bushel per acre drop from the current USDA yield forecast, a record of 186.7. Inside trade for Novi beans overnight as it continues to consolidate in the 1005, 1020 area. Meal has rebounded a touch overnight after its recent sell-off, just above its contract low of 266.10, and that for the October contract. Wheat prices did reject trade above yesterday's high in both Kansas City and Chicago. Market seems to be going through a little bit of a quarter-end, month-end short covering. We do expect slightly lower U.S. wheat production in next Tuesday's small grains update. Thanks for listening, everyone, and have a great Friday and a weekend.